All righty, welcome. It is our trade recap and market recap for Tuesday, December 19th, 2023. Let's get into the markets today and take a quick look at what happened. If we're looking at the market, we opened and working the 5-minute or 3-minute chart here, 15-minute here. We opened and just moved higher solidly at the open. Now, maybe it makes it look like a little bit more than it was here. So let's narrow it down a fraction. I don't think it was quite that big, but we opened up right on SPY here, right around the 472 mark, and just ran up all morning till about 10:30 or so. Then just leveled off, a little bit of a spurt, some pullbacks, but for the most part, just a pretty flat rest of the day. If we're looking at the SPX, which is sometimes a little bit easier to just get a sense of uh, what was happening in the market today on SPX. Once you moved up on the open, after the first hour or so here, we ended up right, where's the first hour? Right around 10:30 here or so. By the time we hit 10:30, we were at 47.60, and we ended the day at 47.68. So we were really within like a 5-point swing all day. It was perfect for straddles, which we did on the session today. I also sold puts and I sold calls, 0 DTE, both after the open move up. And that was a good call today. Just sideways movement. I mean, the market's still going higher, up, 28 points on SPX as we look at it. And let me move to the daily weekly chart here. Up 0.6% on SPY, just keeps climbing. This market is just going to stay overbought and climbing higher and higher as we go here with no regard to safety. So you're well above the 3 ATR. You're just riding it higher as it's turned into this nice 45-degree rise here. Just a strong up move on SPY, overbought on RSI, getting even higher. Now, today we did hit a new high here, okay, and we'll move. We can move. I don't want to move that. Yeah, we can move that one out of the way. We're almost to all-time highs again, but this high was not a new high on RSI on the daily chart. So new high in the market, not a new high on RSI. Doesn't mean that we have a serious divergence here, but RSI is not hitting new highs at the same time the market is. It's over the 3 ATR. I'm not saying we're crashing tomorrow, but this is a stupid rally. And if you're getting long here, you're doing great. But if you haven't gotten long and you're thinking about it, I just think that risk-reward ratio is stupid. Doesn't mean you shouldn't, potentially be trading something. Our 112 trades, perfect for this. Strangles, not so perfect for this. Strangles don't want to see you go one direction only for 2 months. That's not helpful for Strangles. But if you're long, it's all good. Your accounts are looking pretty good. If we look at the tech stocks, look at the Qs, it's pretty much the same thing, hitting new highs again today. So we can continue to just move the marker up and just new highs each day. We are overbought and rising. You're now at nearly 80%, 80 on the RSI. That's a pretty overdone reading. Weekly, daily. Look at this. 1, 2, 3, 4, 5, 6, 7, 8 straight weeks up. I mean, just no pullbacks really whatsoever in the market. It's craziness. It's overdone. What goes up this way is probably going to come down this way, but right now you're doing what you can. Small caps breaking out of this range for the first time since all the way back here in August of last year. So we're hitting some new highs that we haven't seen since August of last year. We are now extremely above the 3 ATR level. We are very into overbought territory as well. On the small caps, the number of stocks above their 50-day moving average moved all the way up to the 90, which is an extreme reading for us. Okay, I mean, You rarely get there without a reversal, and now this is one of the highest readings that we've seen in quite some time. So again, more overbought news. VIX dead, down at 12.5. US dollar falling a bit more today. So the dollar continues its downtrend, had a little bit of a bounce and then just resumed the downtrend. Still looks ugly on the weekly as well. We look at the 10-year Treasury. It was lower fractionally on the session today, which of course would mean bonds moved up a bit. But really, bonds have been in this same range for about the last 4 sessions. They are also overbought. So bonds also overdone. Taking a look at futures quickly today, Aussie dollar, great day up. I mean, almost a 1% move up in the Aussie dollar. Pretty good bounce in the British pound, pretty good bounce on the Canadian dollar, and then a pretty good bounce or move higher on the euro today. Nothing oversold, or nothing overbought here. There can still be some more up, although it looks like the Aussie dollar is starting to get overbought on the daily. This has been a pretty good uptrend as the dollar continues to fall. I think the risk reward on Forex is just not there right now. I mean, if you had some 112 trades on, I think those are perfect in here, but I'm not getting long. I'm also not strangling these at all. If we take a look at oil trade on the day, oil was up 1.8%, a pretty good up day on oil as it's breaking out of this descending wedge to the upside. RSI crossing 50, MACD rising higher. I'm very bullish on oil here. I think selling puts in oil, selling put spreads, selling naked puts, 112 trades in oil, lots of bullish opportunities, I think, in oil here. Very good risk reward as opposed to the markets here. Things are lined up looking pretty good, maybe starting to get a little bit of a reversal on MACD and RSI on the weekly as well. All right, gold moved up a bit on the session today, gaining about a little more than 0.5% as we just continue to move up this uptrend line. MACD rising, RSI rising. It's above 50 and moving. The weekly looks solid. The daily looks solid. I like gold here. I think gold is another good risk reward long play that's in here. Bonds, now you're breaking another downtrend line on here. We'll extend this out a little bit to see if it forms any kind of a support level on any pullback on bonds. But other than that, a pretty flat day on bonds. Slightly up. Nothing terrible, nothing great. But bonds also in that overbought area. I'm not super big on getting long bonds in here. I think they've had a really good run. I would not be surprised to see some decent pullback in bonds. If we take a look at copper, we're doing well on a 112 trade. Copper, big up move today, really helped us. I think our copper 112 is up like 40% in like 2 days. So that's a fantastic trade. We've also got live Catalan. We had a nice move up, consolidating back a bit here. Weekly, looking like it's starting to try to make some improvements. We're breaking out of this descending wedge. I like where we are in LE. We've got a 112 trade on here. So if we do pull back, we could land in the trap. If we go higher, we have no risk to the upside. So it's a perfect move. And then nat gas, I do like it here. I think it's an opportunity to trade it. Yes, the Widowmaker, so trade it smart. What would you do? I don't know that I want to put on Strangles here because it can really rock in one direction or another, but I think a 112 trade here on nat gas would certainly not be out of the question as a good possibility. If we take a look at all of the sectors today, everything green, everything is up. Good positive breath day. Every single thing is up. Led by the gold miners. Again, I've been very positive on this group here. That nice little pullback the last 3 days gave us a good entry point to get moving higher if you did that. And I'm going to add one more piece in here. Let's add the 50 mark on the RSI just so we can track where we are in relation to the 50 on RSI, which is a key level that I like to watch for momentum. And then we had moved above it and we're still moving higher. I do like the gold miners here. If you're looking at the weekly chart, I think the weekly chart, you're in a squeeze, moving higher. I really, really like what we're seeing out of gold miners for a long play right now. And then as far as the sectors go, the top performing sectors, industrials, retail, uh, what? Why am I drawing a blank right now? Pharma in here and semiconductors all performing pretty well. Regional banks performing well. Everything is just pretty overextended, except for oil. This is a really good risk reward area here on oil. XLE also looks pretty good. I think that's a good trade opportunity. You also have some of the communication sector looking pretty decent in here, getting into overbought, but having a good day today. Bottom performing sectors here would certainly be your consumer staples, as well as tech didn't do great. It's still up. NASDAQ had a good day. You're up 0.5%. Nothing crazy here on tech, but not as overdone as some of the other sectors to keep an eye on. And then if we look at the Magnificent Seven, Apple up 0.5% today. Microsoft up just fractionally on the day. Really looks nice here. I like where Microsoft is. Amazon down fractionally. Meta had a good day today. Meta really on fire lately. Google moving up. Any opportunities here? Man, I think Google is an opportunity. I think NVIDIA is a potential opportunity. I think Tesla is another opportunity. And, the opportunity may be fleeting now, but I still think there's a little bit more upside on it. Costco, I'm really, 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 really wanting to look at a call credit spread here in Costco. Super extended, way above the 3 ATR, way overbought on both the weekly and the daily. I think Costco is a really good call credit spread, defined risk trade. All right, let's take a quick look at our account here on the day. If we're looking at our account, we had a delta to finish the day, negative 179. So good negative delta overall. We're still pretty delta neutral, 0.05% of the portfolio. So very delta neutral. I like the fact that it's slightly negative in this overbought time frame. Theta did drop a little bit today. So our theta getting a bit light. Volatility is so low that it's hard to get a lot of value out of here. I'm not actually that disappointed in a 0.26 theta, 0.3 theta, somewhere in that neighborhood with vol so low. We did have net lick pop up a bit more today. So net lick up a little bit. We are very, very close to an all-time high, which we set, I think it was this, was there a 334 in here? Yeah, 334. Maybe not. So I think it was the end of the month here that this was our high. So looking at this 333 area here, still our high. We're at 331.8, and we are fractionally off of that high. We did manage to book another $4,670 worth of gains today. So closed out some nice winners, 46.70 today on the day. That gives us a realized gain on the month of 38.11, excuse me. Our net lick on the month is still down fractionally. It's all good. Most of that is due to just being overbought on ES. So being overbought on ES is, providing some good stuff to take off these naked puts. It's also just keeping our net lick down a bit because it's hurting the PDSs and it's hurting my hedges, but it's all good. I like the fact that we're hedged well here. If we take a look at the year now, we're back up over the 100,000 mark. So we're at 103,594. I think that is the high water mark of the year. So we have now made 103,594. in our account. We started really at 250,000 beginning of the year. So we're up in realized gains, up over 41% for the year in realized gains. And we are up now, just our net lick alone here. Let me make sure I got the right number. I make a quick adjustment. So we're up really 33% year to date in net lick. Perfect. That's exactly what our goal is. 3% a month. We're right on target for that from a net lick perspective. We've already beaten it from a realized gain or loss because it's 3% a month. So we've outdone that. Can we still take some losses? We certainly can. There are still a little bit over a week left here. You got some holidays coming up, but we've got 4 days next week. We still have 3 more days this week. Anything can happen. We're in pretty good shape with most everything except one ES strangle starting to get a bit tested to the upside. If the market does not chill out soon, that one might become a loser. And we've had a little bit more of a difficult month on that. We've taken 2 strangles already, one in live cattle and then one in ES. We still have an 89% win rate. We got asked by some members today, and I see people on YouTube, well, why are you doing strangles and stuff in the market? Well, these strangles, I didn't put them on yesterday. These strangles have been on for weeks now. Well, don't you take them off because the season? Do you look at seasonality? Do you look at where the market is? Do you look at volatility? Frankly, I don't. And I'll tell you why. I have a 90% win rate, 89% win rate this year. When I looked at all of my strangles on the year, just taking a quick look, I've won 117 of 132. So 117 winning strangles out of 132. Okay. 117. Okay. I did not use any real technical analysis, volatility, or any of that. I didn't use, I made some jokes that I didn't use, the Cleveland Browns win schedule. I didn't use Taylor Swift's concert schedule. I don't use the Zodiac or, moon in retrograde or some crazy stuff. I didn't use any of that. Okay. I'm putting the same doggone trade on every single time. It's got a roughly 90% win rate with my stop loss and with the take profit. Okay. It's been, when I back tested the strategy, it's 90% win rate. Okay. Roughly 89%. I'm at 89% in reality, 117 winners of strangles this year. I'm up $27,000 in strangles this year. Okay. And I'm not looking at volatility. Oh, but there's CVOL and the volatility of this and that. That's all great. You can wait for volatility to rise, okay? Or you can just make money while you're waiting for volatility to rise. Sometimes I get good volatility. Sometimes I don't. Does it mean I don't ever look at that? No, I do look at volatility at times. If I need to put on a trade, well, what's got some good volatility now that I can jump into? But I'm still putting on a strangle that's going to give me a 90% win rate based upon the probabilities there. Because of the delta I'm trading, the time, my strategy, how I manage them, I know it's a 90% win rate. It doesn't really matter what the volatility is or not. In fact, when volatility increases, yeah, you lose a couple trades, but I would have lost them anyway. Okay. I lose most trades not because of volatility spikes. Volatility has not really cost me losses. What's cost me most losses is the stock moves in one direction and it doesn't stop. And we just seen that in the market here. ES has gone up 8 straight weeks in a row. Well, I don't know that anyone's predicting that. Oh, seasonality. We knew that it was going. You didn't know it was going up 8 straight weeks in a row. There's a Santa rally that comes after Christmas until 2 days into the new year. Okay. This has been going on for 8 weeks, for 2 full months. Okay, there. We haven't had a pullback. Volatility is still low. If volatility spikes, we'll probably be in trouble. What volatility does do for me is it gives me more premium and it gets me farther away on the trade, okay, on my strikes. But I don't change my deltas because volatility is up. I have the same probability whether volatility is higher or lower. All volatility is doing is giving me more premium in those trades, which is nice. Okay, but I've made almost $30,000 on Strangles this year. Okay, I'm not changing anything that I'm doing with an 89% win rate in these Strangles. And I'm not trying to predict movements at all. You can put them on and you can win. Anyway, long-term 112 trades were up $53,000 on the year, 100% win rate on those. The other 112 trades, I have a 98% win rate on those, making 24 grand. They're just behind Strangles in profitability. And then zero DTE, I've made 10 grand this year, despite just a horrific April loss. Let's take a look at today's trade. So what did we close out today? First one here was an FB112 trade. I closed the naked puts on that today. So it's a free FB112 trade right now that I've got on. So a great hedge, made $1,660 on that in 46 days. On the other hand, I also closed the January 31st long-term 112 naked puts. I closed those today as well. So I booked a profit on that 112, and now I have those that PDS working for me. That was $2,400 today. I put on a zero DTE put spread, managed to pull out $200 on that. I put on a call credit spread, zero DTA. I took in another 150 on that today. And then I did one of the hasty trade strangle straddle messes that they have. This one did pay off nicely today, $320 to the good. I closed it for a 27% winner. So that straddle closed for 27% winner, $320. But I also closed the strangle that they recommend. Now, I didn't do 30-day. I actually did, I did a zero DTE version of that trade today. So that's why. In fact, I don't think I actually did do that. Give me a second, and I'm going to wrap up for you guys here. All right, if this video was helpful to you and you like what we're doing and you're getting something out of this, please click the like button here. Subscribe if you're not a subscriber. Follow us through. We got some fantastic stuff for next year coming. We've got a big session tomorrow for our members. And if I'm looking at today's activity, actually, when I did do that strangle here, the 47.15 strangle, I did this out in the future. So I did 12.26 is what I did. So sorry about that. That was a 7 DTE strangle. They do 30. I did 7 DTE on that today. So December 26th. I'm not sure why it's not calculating this correctly, but 0 minus A2. Got it. I see what I'm doing. All right. So 0 days in trade, but this was a 7 DTE strangle that we had on that trade. Okay. Anyway, great day today. Up $4,670. Great month so far. We're up 3,800. We're up 103,594 on the year. Great stuff. We'll see you guys later. Take care. Have a safe evening. We'll see you trading tomorrow. Bye-bye.